Good afternoon and welcome back everyone to the Moneycontrol live stream. You're watching another edition of Markets with Santo and CJ. Well, we are looking set for a record closing high once more, of course, but we have seen some of the markets zing give away, from the way we started. I mean, we were higher by almost 120 points at one point of time during the day, but at this point of time, the Sensex and Nifty are holding in the green territory, but they have come off day's high. That said, we will see fourth straight day of record closing high today. That is at least the indication at this point of time. If you look at the mid and small cap space, their outperformance continues. It's the fourth consecutive day that the mid and small cap stocks are now going to outperform and much higher than where the large cap peers are ending. But there seems to be some bit of, Santo news flow coming in that might make some bulls stand up and take notice. Of course, Nomura India came out with a note today after the GDP data released yesterday, and they believe that, and this is actually a very big statement to make from Nomura, but they believe that India's growth cycle that started somewhere in the middle of 2021 has already peaked. From here on, they're expecting a sharp deceleration in the growth rate. They expect the growth to come down to about just below 5% in 2023, and overall about 5.4 to 5.8% in FY24. So that is clearly a very sharp deceleration from the double-digit growth that we were seeing just 2 quarters ago. The reasons for that, they believe that the pent-up demand in the economy post the COVID lockdown, when they ended, that clearly is fading away now. You can also see some hints of that in the November sales data that is coming out from automobile companies as we speak. Plus, financial conditions are now much tighter than where they were 1 year ago because of the interest rate hikes that the RBI has taken. And that is one of the reasons why Nomura believes that India's growth rate probably has peaked out, Santo.
Well, but at the same time, the Economist newspaper has suddenly turned bullish on India. In fact, that cover says that the recent strength seen in the economy could last well into the coming
Santo,
if
you read the comments in that tweet of the Economist, everybody was like, this is a contra indicator. If the Economist is saying that India is going to remain a bright spot in 2023, then probably the market has topped out.
Well, that said, CJ, you're seeing conflicting trends here. On one hand, you have the index which is rising steadily, and at the same time, if you speak to people in the market, you sensing an absolute lack of activity. There is in terms of trading volumes, clearly there's not much happening out there. So this is something that I've been maintaining probably. As long as there is skepticism, you will continue to see the market make new highs. It's not until you have retail money flowing in once again in a big way, and which is reflected by the increase in the number of broking accounts and demat accounts. Probably till then, you could see the market still climbing.
Yeah, I think Santo. I mean, probably my head is on the line here, but I don't think that sort of participation that we saw 2 years ago that is coming back anymore. Because let's not forget, yes, even during the past bull markets also, retail investors did used to come to the market, but that generally used to be through the mutual fund route, not so much through the direct channels. 2020 bull market or the COVID bull market was an exception in the sense that because people were so much, had so much time on their hand because of working from home, they could actually take that step of participating in the market through the direct route. I don't think those days are coming back anymore because the economy is no longer the same. People are now going back to offices. At least most offices we know clearly are coming back to at least a hybrid model, if not a full functioning office back to office sort of model. So I do not expect retail investors to come back in the same pace that they did. Some may come back, but I think the only way they would probably come back would be the mutual fund route once more. And as we have seen, in terms of SIP flows, clearly SIP flows have remained quite sturdy, even during the days when we were seeing almost a 15 to 20% decline in the market. So for me, I don't think this rally would be driven by retail. I think this could be more driven by institution than by retail investors.
Well, that's it. A quick check on the FNOQs. We're seeing long build-up in futures of Birlasoft and Emphasis, and short build-up being seen in futures of Granules, HPCL and IGL.
Well, moving on to the 5 stocks that were budging in trade for us today and came up on our radar, and starting off with a banking name.
Yes, Bandhan Bank. Now, interestingly, the stock has underperformed the rally in the banking sector for some time. However, the worst may be over for the stock if you believe Motilal Oswal Securities. According to the brokerage, after the near 30% drop seen recently, the valuations may have bottomed out for the time being. Now, there are some positives as well in Bandhan Bank at this point. Now, its emerging entrepreneur business book, the stress in that pool of loan was as high as about 36% during the first quarter. That is now moderated to about 17%, and at the moment its special mention accounts too is elevated, but when you look at it in context, there also it is showing signs of moderation. The peak was around 37%, but the currently at the end of the second quarter it's come down to about 12%. Collection efficiencies are good. There could be potential recoveries as well. Of course, a lot depends on how much those recoveries will actually play out, because most of it happens in the fourth quarter and the first quarter of next year. So there is there's cause for some bit of caution there, but on the whole, if you look at the valuation side of it, maybe the downside appears limited. Motilal Oswal has trimmed its EPS estimates for the current fiscal as well as the coming fiscal, but at the same time it has retained its neutral stance on the stock with a target price of 270 rupees.
Well, Santo, I think the only concern, with respect to Bandhan Bank is that whether, the fact that you are mentioning, or I mean, Motilal Oswal is mentioning that this could be the bottom or the worst is over. The only thing is that Bandhan Bank stock has seen these false dawns before as well, and one wonders whether this is another false dawn, because just 6 months ago, I think somewhere around March and April, the same sort of murmurings were coming out of the Lal Street that probably the worst is over for bank in terms of stress assets. And then of course you had the floods in Assam, the monsoon season, and that clearly created another whole set of mess as far as Bandhan Bank is concerned in terms of bad loans. So for me, I think as long as the its portfolio remains concentrated as it is right now, the overhang on the stock will clearly remain. That is the biggest risk as far as Bandhan Bank is concerned. And any upside from here on will hinge on that stress book getting cleaned up. I think there is a possibility or at least a fear in the market that provisions could rise still, because I don't think the bank has still accounted for the entirety of the bad loans on its book. But at this point of time, any upside will clearly depend on if we see an improvement in asset quality in the third quarter. If that happens, clearly the stock is primed for a good rally going ahead. Also, at this current juncture, while MOSL might believe that the stock might have bottomed out, the technical indicators clearly are not indicating that there is a reversal on the counter at this point of time. Most of the momentum indicators are quite downbeat. The stock is trading below both the 200 as well as the 50-day moving average at this point of time. So clearly for me, there are no signs yet that a turnaround could be on the offer going ahead. The first stock on my radar today is from the metal space, and this is Hindalco Industries. The stock was buzzing today in trade amid a global rally in metal stocks that we are seeing, largely because of what is happening in China. Now, we have been talking about China the past 3-4 days now, and a lot has been happening in that country. Now, after the protests that intensified over the weekend, China has today come out and softened its COVID policy. It has lifted lockdowns both in Guangzhou as well as Beijing, which is a big policy reversal as far as China is concerned and the way it deals with COVID-19 is concerned. That change in strategy clearly is sparking a rally in metals across the board. Now, if you look at global aluminium prices also, they have risen about $400 per ton in the past, 2.5 months. I mean, after bottoming out somewhere around $2,000 per ton around in the last week of September, they're now sitting almost at the edge of $2,500 per ton at this juncture. So clearly there is an improvement in international prices as well, and therefore I think going ahead, the realizations for Hindalco could improve. But more importantly, what will be important for the re-rating of the stock going ahead would be the sustenance of the volume growth that Novelis has been posting. Now, one key customer of Novelis had said that they see, expect volumes to decline going ahead and over the next 5 years because of a global recession. But at this point of time, we will have to see if there is any change in commentary from Novelis, because Novelis has not changed its commentary so far. So overall, Santo, I think given the fact that the stock is down about 30 to 40%, the risk reward in Hindalco clearly is looking quite favorable.
Well, among commodities, aluminium clearly has been showing some strength in recent times there. But at the same time, CJ, let's not forget, you just mentioned the reopening in China. Now, when that has happened in the past also, when restrictions had been eased, you've seen that the exports from China also tend to increase. While it's seen as a consumer of steel, but at the same time, its exports of aluminium are quite high, and that's what had led to a softening of prices in the previously also, when you saw a sudden spike in aluminium prices and then they came off sharply. At this point in time, analysts are still divided whether aluminium prices will ever see the kind of highs that they saw during the March quarter. You'll see the occasional jump. Remember, we are still grappling with supply chain disruptions in most part of the globe. So that said, another factor, CJ, for aluminium prices coming off is also not just aluminium, most commodities in fact, is that there is resistance from consumers at higher levels, and given that the world major economies are looking at a recession, are staring at a recession at this point in time, this trend may not really sustain.
We'll have to wait and see, Santo. Of course, I mean, what China may bring to the market in terms of aluminium supply, a lot of it has also been taken off the market in terms of, in terms of the production levels in Europe. Because of the energy crisis in Europe, we know that a lot of aluminium smelters there have closed down. So that clearly, I wonder if the demand-supply mismatch there would be offset that much. I still feel that if China does reopen in 2023, demand is likely to outstrip supply, aluminium supply next year, and that is one of the reasons why some brokerages out there, at least international brokerages, still felt that aluminium market would remain tight in 2023, and therefore prices could also remain elevated. Of course, they may not see the peak of the Russia-Ukraine crisis, but they still will remain quite elevated compared to where they were during the depths of the pandemic.
Well, third stock is RBL Bank. While it's been an underperformer in the banking sector during the recent rally, still things appear to be on the mend for RBL Bank. The stock has been steadily inching up. It's now climbed to about 153 rupees and is at almost 10-month high. A good comeback after having fallen as low as 80 odd rupees sometime in June. Now, what's getting market, I wouldn't say excited, that's a very strong term, but what some analysts see as positive is that things are beginning to change ever since the new CEO has taken charge. And the key, three key things that has been targeting mainly is that the management stability, cleanup of the NPAs, and also profitable growth. And this appears to be yielding fruit in some ways. Besides that, the bank has also made adequate provisions for its non-performing loans. Now, asset quality was one of the big concerns. Also, its MFI business, that has actually seen an uptick after almost 5 consecutive quarters of degrowth. So things on that front also appear to be looking slightly better. It's still some way to go before a full-fledged improvement. Now, Ventura is the latest brokerage which has turned bullish on RBL Bank. In fact, a very optimistic price target there, 256 rupees is what the brokerage expects the stock to touch over the next 24 months. And Ventura is the basis for that price target is that Ventura is looking at a valuation of about 1-time adjusted book value for FY25, which also would be around that level.
Yeah, I think, Santo, clearly compared to Bandhan Bank, I think RBL Bank's transformation story clearly is showing some green shoots at this point of time. The new CEO who has come in, I think he has been brought in to clean up the act as far as RBL Bank is concerned, and there are already signs of that in the second quarter, and I think you would see a large scale improvement in the third quarter as well as far as the asset quality is concerned. Going ahead, of course, challenge for RBL Bank would be on the deposits front, because we know there is a rat race at this point of time for deposits in the Indian banking sector, and generally analysts are of the view that banks with a higher amount of credibility, higher loyalty among customers, such as for example your ICICI banks and your HDFC banks of the world, especially on the private sector, they will be the one who will be the beneficiaries at this point of time compared to your mid and small size banks. So for me, I think given that RBL Bank's credibility had taken a hit over the past 1.5-3 years, I think it will be difficult for it to get the amount of deposits that it might need to accelerate loan growth going ahead. It will ultimately would have to tap the money market, and there we know that at this point of time the cost of borrowing has increased quite a lot. So therefore RBL Bank's NIMs may not see any sort of improvement compared to the asset quality, and I think much of any sort of a rally on this could be a tactical bet than a strategic bet, as say for example a Federal Bank or a ICICI Bank or an SBI is right now. Moving ahead, the second stock on my radar today is from the auto space, Bajaj Auto. Of course, the stock was weak in trade after a lower than expected set of sales data coming out for the month of November. If you look at the India two-wheeler sales plummeting 15% on a year-on-year basis. That too, I mean, you have to also account for the fact that the year ago base was actually not that high, given that it was just emerging, we were just emerging out of COVID. So clearly a 15% decline on sales is indicating that demand traction at this point of time remains quite weak for the entire two-wheeler space. And of course, the company had missed estimates of Nomura on that front. Also, two-wheeler export story has been a pain point for a lot of two-wheeler companies in India over the past 4-5 months now. And two-wheeler exports again declined about 28% on a year-on-year basis because of the pain, the currency pain that is being felt by a lot of African countries as well as Sri Lanka. And therefore, I think at this point in time, Santo, the weak demand conditions, especially in the rural areas, are unlikely to abate for two-wheeler companies. And these stocks, after the spurt that they have seen initially, expecting that there would be a very steep revival in two-wheeler volumes, I think that might correct a little bit going ahead.
Well, CJ, I'm inclined to agree with you because the price action seems to say it all. When we were discussing the stock sometime in June and July, Bajaj Auto was one of the best performers.
Yeah,
yes,
absolutely.
Then there was this buyback announcement also. So all those factors kind of had improved sentiment for Bajaj
I mean,
Auto
if you look at it from a buyback price of 4,500, I think Santo, the stock is almost down close to 20% now.
Exactly.
So
clearly, that is at this point in time, the pain in the rural markets is being clearly felt by two-wheeler companies. But that said, CJ, typically I think this factor has been known for quite some time now. In fact, the company itself has been openly talking about the difficulty in growing its sales. The festive season was, of course, it was an aberration. But that said, a lot of pessimism probably has been built into the stock price. I would say the stock has been underperforming for the last 2 or 3 months now. And it is, again, to use one of your favorite phrases, reversion, mean reversion, as I would call it, that at any point in time the sales might start looking up now, because there are also indications that things are beginning to slowly look up. It's just a very shoots, I would say, just green shoots at this point in time.
Yeah, but my concern, Santo, remains on the pricing front, because clearly I don't think it's not as much about people's income not being there to afford a motorcycle or a bike. I think the bigger problem is the price hikes that the industry has taken to pass on the earlier input costs. I think clearly it has become unaffordable for a large segment of the society to purchase two-wheelers at this point of time. I mean, we have Hero MotoCorp, recently coming out and suggesting that they will again take price hikes. So clearly, price hikes are not going away anytime soon as far as the two-wheeler space is concerned. And if these price hikes keep on happening, I just wonder whether there will be any volume growth improvement in the coming 4 to 5 months as well for this sector.
Well, last stock on a watch list this afternoon is Agrotech Foods. Now, over a long term, the stock has been underperforming. It's not really given any meaningful returns to investors in case you had been holding on to the shares for, let's say, the last 9 or 10 years. But of late, there's been some activity in the stock. Now, remember, it touched a high of close to about over 1,000 rupees. From there, it has again come off around 20%, but we are seeing renewed activity, huge volumes also in the stock. Now, there was an analyst meet by the company recently, and I think that is leading many analysts to turn positive on the company. What the company has said is basically that it's going to increase its emphasis on the food business and grow the revenues there. So right now, foods is about 44% of the overall revenues, and the company's aim is to make it in excess of 56% by FY25. So right now, the company is more of an edible oils player. It's in the business of distribution of edible oils, but it is increasing its focus on food. That is where it sees the fat margins actually coming from. Now, the increase in food revenues has been quite steady over the last few years. Company has been trying to come out with differentiated offerings, but at the same time, you're not yet seeing the change come in the margin. The margins have been stagnant for a very long time now, about 5%, which is one of the factors that could explain the underperformance in the stock, that the market is still reluctant to give a higher re-rating. Now, what the company is trying to do is trying to increase its distribution expansion and set up more facilities pan-India. So, these are the things that will probably help it achieve its goals. But at the same time, CJ, I would say that that's again going to be a long-term play. So, it will play out over the next 2 years or so probably. So, I think the market is going to take its time to firm up a view on the stock. So, while you might see a temporary pullback, I'm not sure if this can really sustain.
I think, Santo, of course, agrotech at this point of time has been looked as a low margin business, largely dwelling in the edible oil space. Remember, 56% of its revenues come from the edible oils segment. So clearly that if margins there have been suffering as they have been because of higher raw material costs, it will overall dent the consolidated margins of the company, and that has been the story or the problem for agrotech this year. But clearly, I think it is a transformation story. It is trying to shift its business mix or revenue mix from edible oils to food. Food at this point in time has risen to 44%. It is very likely in the coming 1 or 2 years, I think it will cross 50% and edible oils will go down. And I think the management bet is that as the share of food increases in the revenue pie, it will enhance margins as well, given that food business makes more margins for the company. Phillip Capital, which has a buy rating on the stock, they believe that clearly the company can double, more than double its revenues from the food business. So they are basically, indicating that the food business will account for a higher or much larger share of the company's overall revenue. And very interestingly, Santo, the recent bet on the chocolate side of the business, I think that is something that could be a game changer, because if they can really put the foot in the door as far as the chocolate market is concerned in India, then being a very high margin lucrative product as chocolate is, that could clearly be a kicker for margins going ahead. Overall, Phillip Capital is expecting some 320 bips increase in margin for the company over the next 2 years, from about 5.5% right now to more than 8.8% in FY25. So at this point of time, it seems that the street is bullish, but the market may not be, and we will have to wait if the market's point of view also changes on the stock going.
But also, let's not forget, CJ, competitive intensity in the food business is pretty stiff.
You have the Patanjali's and the Adani
exactly.
Wilmars of the world also trying to get
that's
into
what will also have to be closely watched.
Absolutely.
Well, and quick check on the markets, and at this point in time, indices still holding on to their gains. Nifty is up by close to 50 points at 18,807, so it will most likely close at a record high today as well. Sensex up by close to 166 points. Wipro, L&T, Infosys among the gainers, big gainers today, up more than 1%. In the banking sector, you have PNB, which is up 4%, Bank of Baroda up 3%, and State Bank of India also up by more than 1%.
Yeah, and Santo, the VIX index clearly is in the favor of the bulls. The India VIX index is down about 3.5% at this juncture. Clearly a very positive day as far as the bulls are concerned. In terms of sectors, Nifty IT, the biggest gainer today, up about 2.5%, led by the rally overnight we are seeing in Nasdaq. Nifty Media Index higher by 2.1, and the Nifty Metal Index higher by about 1.5%. So it's been a day of IT and metal stocks. It's been a day of export stories than domestic stories, because if you look at domestic stories, Nifty Auto down 0.3%, Nifty FMCG down 0.4%, and Nifty Pharma as well as Nifty Private Bank down about 0.2% each. So clearly, it's an export story today than a domestic story that we have been seeing recently, Santo.
And with that, what do we have to keep an eye out for tomorrow?
Well, Santo, a clutch of data points coming out in the US later today. You have the US manufacturing PMI, the ISM manufacturing PMI data that will come out. Also, initial weekly jobless claims data will also come out later in the evening. Plus, the US core November PCE or producer price index data will also come out. So a clutch of data points coming out from the US later in the evening, and that could probably have some sentimental impact on our markets as well.
Well, and with that, we wrap up this edition of Markets with Santo and CJ. Thanks for watching and also sending in your queries.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.